tinggalan dan sesuatu yang mesti
Introduction, I request his father, CA Giriraj Khandelwal sir, to present a memento. Request our past convener, Pradeep Bhai, to present CABF receipt fund. Now I request my friend and our today's speaker, C. Aman Khandelwal, to present his presentation. Thank you.
Good evening, members. Thank you, Sikandar, for the kind introduction. Before I start with the presentation, I would just like to know how many members present here regularly deal with the issues of charitable organizations in their practice. Okay. So basically, the provisions in relation to the charitable organizations in the new Income Tax Act 2025, it's more or less nothing but the old provisions but repacked into new section numbers, a new chapter in income tax. More or less the computation provisions, the registration provisions are more or less very similar to the old provisions. So today's seminar is more like a revision of the old provisions but relearning them with the new section numbers and few changes here and there. Let's begin with the presentation. So just a brief background about the current provisions which are existing as per Income Tax Act 1961. So the various provisions, sections in relation to NPOs are scattered in various different schedules of the current Income Tax Act. Basically, it's there in the chapter 1 where the definition of charitable purpose is mentioned. Under chapter 3, which is the main section which deals with the main computation and registration part of the charitable organizations. Then again under chapter 6A, where the provisions in relation to 80G deductions are given. Further, for special cases, for taxation of special income and the exact tax, there are special provisions mentioned in the chapter 12 and chapter 12EB. Now coming to the current set of provisions, the new provisions. Now all these provisions are, which was scattered earlier in the current Income Tax Act, have now been grouped together under chapter, part B of chapter 17. And the heading of the chapter is Special Provisions in relating to certain persons. Now the different sections that are applicable in the new Income Tax Act, which deals with the provisions, are the definition of charitable purpose has now been given in section 223 as compared to the section 215 of the previous act. Further, all the provisions are consolidated between section 332 to 355. Further, this chapter 17B has, for ease of reference and use, has now been subdivided into 7 subchapters. The name of the 7 subchapters are registration, section 332 to 333. Then in relation to the income of the registered NPOs, section 334 to section 343. Then in relation to the permissible commercial activities, the sections are 344 to 346. In relation to the various compliances that have to be done by the NPOs, the provisions are clubbed under section 347 to section 350. Further, the various violations that can lead to consequences, those are mentioned under section 351 to section 353. The section 80G, erstwhile section 80G, has now been moved to your, the registration under section 80G has now been moved to section 354. And last, section 355 is in relation to the interpretations. So the various terminologies, the new terminologies, and even the existing terminologies that have been used in these sections have been defined under section 355. This slide, I would like to take it in the end. Here, just for your ease of reference, all the relevant sections, a brief comparison of all the sections that were there currently, and their comparative sections under the new act have been given here for your reference. I'm not going through them. Later on, when the PPT is shared, you all can refer to it. Moving ahead, let us first discuss the section which is in the first subchapter, which deals with the registration provisions. Now, section 332 deals with the registration provisions. The summary of the section is given here for ease of reference. The section 332(1) deals with the list of the types of NPOs that are eligible for registration under this section. Section 332(2) prescribes the eligibility criteria. Section 332(3), there's a table given here where the different scenarios are given, 7 different types of scenarios, where the time limit, the case under which you need to register, the timeline of passing the order, and the validity of the order is given under section 332(3). I have dealt with all of these sections in a detailed slide, so let us directly move to the respective slides. Now, under the new act, they have given a common term for all the type of trusts, Section 8 companies, societies, and they are collectively now will be referred to as registered NPOs, RNPO. So under the old act, under various schedules, under various sections, different kinds of words were used like university, institution, Section 8 company, hospital, etc., etc. So now collectively, all these entities will now be referred to as registered NPOs. The list of the organizations are given, the types of NPOs are given here. Let us go through them quickly. Public trust, a society registered under the Societies Registration Act or under any other law, a company registered under Section 8 or Section 25 of the Companies Act, a university established by law or by any other educational institution affiliated or recognized by the government, an institution financed wholly or in part by the government or a local authority, any other person referred to in Schedule 3, and any other person as may be notified by the board. So now a question arises, what happens to the current registrations of the existing NGOs under Income Tax Act 1961? So that has been taken care while drafting the new Income Tax Act. There is a specific definition given under section 355, where the registration includes provisional registration, provisional approval, or approval as referred to in the second provision to section 1023(c) or 12AB(1) of the Income Tax Act, and also under section 332 of the new Act. And further, section 355G also states that a registered NPO means any person having a valid registration under any specified provision, and such registration has not been cancelled. So the existing organizations who are registered under section 12AB need not reapply under the new regime. Their registration would be valid till the time their existing registrations do not expire. Yeah, now section 332 deals with the eligibility criteria. Quickly, I'll just read the section. A person referred to in subsection 1 shall be eligible for registration if such person is constituted or registered or incorporated in India for carrying out one or more charitable purposes as referred to in section 223 or one or more public religious purposes, and the properties of such person are held for the benefit of general public under an irrevocable trust. I'll come to it why I have highlighted the words irrevocable trust and in India. Further, these properties are wholly for charitable or religious purposes in India and partly for charitable or religious purposes in India if such person was constituted or registered or incorporated prior to the commencement of the Income Tax Act 1961. Now those members who are regularly dealing with 12A registrations, 12AB and 80G registrations, in the past 1 or 2 years, there has been a huge debate about this irrevocable clause in the trust deed. The assessing officer or the commissioner, while approving or during the proceedings under section 12AB or 80G, they specifically ask you in the notice and even in the application form, ki is the irrevocable clause mentioned in the trust deed. Now till now in the previous act, 1961 act, this word irrevocable trust was not incorporated in the eligibility section. But now they have incorporated it. This means that now there may be a bigger challenge for organizations who are not having this irrevocable clause in their trust deed. And this might lead to rejection of their 12A and 80G applications, and otherwise they will have to amend their trust deed. Further, even the word the property should be held in India was not mentioned previously in the act. So the conclusion of this is that foreign entities who run through a branch or a liaison office in India will not be able to set up a Section 8 or charitable organization in India. So here I have mentioned the consequences of the addition of the word irrevocable trust. Now during the registration there will be a more strict scrutiny of the trust deed, where the clauses in relation to revocation, dissolution, amendment powers in the hands of the settlers of the members will be read strictly. And if any of these clauses mean that the trust is not irrevocable, then the trust is going to have, the NPOs is going to have a hard time in getting new registrations. Here. So now, beautiful thing that the Finance Ministry has done here while drafting these provisions, they have mentioned, they have introduced this concept of table at several places. So now this section 332(3), here they have given the time limits and the categories of registration. Previously it was, I wouldn't say very difficult, but it was sometimes quite confusing in order to understand I need to apply under which subsection. But with this table given here, it becomes very easy to identify under which category or registration falls into, and they have given all the relevant details in relation to that category of applicant in the table. We'll just take 2-3 of these category as an example. Here, for example, under serial number 2, regular registration. Now, this is for entities having commenced their activities but were never registered under any specified provision under the Income Tax Act. So here, the time limit to apply they have given is that any time during the tax year from which the registration is sought, the time limit to pass the order is also given there within 6 months from the end of the quarter in which the application is made, and they have also given the validity that if someone applies under this category, then the validity of registrations would be 5 tax years. There's a particular reason why I have colored the serial number 3 to 7, which I will come in due course of time. Okay. Now they have also incorporated the provision in relation to acceptance of belated applications. So here under the column C, the time limits are prescribed under which an NPO needs to apply for new registration or for renewal of existing registration. Now, if these time limits are missed and you have made a belated application, so now there's a safeguard that the principal commissioner or the commissioner on making an application and also for making an application for condonation of delay, if they accept it, then your application will still be valid. But the important criteria for accepting the condonation application is the word reasonable cause. Now, reasonable cause, this has not been defined even under the new act. So now we will have to rely on the old judgments that are existing under various sections of the Income Tax Act and then interpret it. Here, I've just mentioned a few case laws here where the term reasonable cause was discussed, which says that reasonable cause can be reasonably said to be a cause that prevents a man of average intelligence and ordinary prudence from acting under normal circumstances without negligence or inaction or want of bona fide. So any general reason given while making the condonation application will not be accepted. Now again, this provision for extended validity for small NPOs, instead of 5 years, they are eligible for registration of 10 years. This is again similar to the existing provisions of the Income Tax Act. So now for certain category of NGOs whose income in the past 2 years from making the application to immediate preceding years, and in both of the years the income does not exceed 5 crore rupees, then such NPOs would be granted registration for 10 years instead of 5 years. Now the category that I had mentioned, colored here in blue, only these category of applicants are eligible for obtaining a registration for 10 years if they meet the prescribed criteria. And it is important to note that in both of the years the criteria should be met. In 1 year, if the income is less than 5 crores and in 1 year it is more than 5 crores, then you will not be eligible to get the extended validity certificate. And further, there were a few queries raised earlier when the act had come. Will this automatically grant extended validity to the existing registrations? The answer is no. You will be granted a fresh certificate for 10 years whenever your next renewal is due. There is no automatic upgradation of the existing registrations. Yeah, now this is a very harsh provision. Just in case if you all miss the renewal or the registration deadline as given here in column C, the time to apply, and if you make an application for condonation of delay and that condonation of delay is not accepted by the commissioner in the following circumstances: from conversion of provisional to regular registration, conversion of provisional to regular registration when the period is due to expire, renewal of regular registration, and in case when you have modified your objects, you are required to re-register. If in these cases your condonation of delay is not accepted, then the exit tax as per section 352, that is tax on accredited income, will be applicable, and there's going to be a huge tax liability on the NPO. So we as consultants to NPOs, our role would be very crucial here in case if you have a lot of NPO clients. Keeping a track record कि कौन से ट्रस्ट का रजिस्ट्रेशन कब एक्सपायर होने वाला है, किसका कब रिन्यू करना है, इज़ वेरी क्रिटिकल फॉर अस. So I don't know, we can maybe prepare one Excel sheet or I don't know, use some software which will remind us duly कि भाई ये ट्रस्ट का रजिस्ट्रेशन अब करना है, renewal. Now there's a very special provision specifically put for the entities. In 2021, there was an amendment in the Income Tax Act that the every trust will now have to renew their registration every 5 years, and this had to be done. The government had granted a lot of extensions till 30th June 2024, but still a lot of organizations couldn't renew their erstwhile registrations. Now this section specifically deals for such NPOs who did not renew their application after 1st April 2021. Now, such entities can apply under this section and regularize their registration. Again, the condition for condonation of delay is also given here. If the condonation of delay is accepted and the commissioner grants you a certificate, then for such entities, their tax registration for the earlier periods, that is tax year 21-22 to tax year 25-26, would be made normal. And this order has to be passed within 3 months from the end of the month in which the application is made. Now, the practical application of this section, we will have to see how the application under this section is entertained, because the act itself is coming into effect from 1st April 2026. And how things will go ahead, how will they regularize the previous 5 years tax registrations is something we'll have to wait and watch. Now this brings us an end to the subchapter 1. Now coming to the subchapter 2, which deals in relation to the income of a registered non-profit organization. So here again I've dealt with each subsection separately. We'll just quickly go through the chart here. So the section 334(1). Now this has prescribed the income tax rates which would be applicable to the various category of incomes earned by the NPO. Section 334(2), it states that the provisions of this chapter shall apply irrespective of anything to the contrary contained in any other provision of this act other than sections 96 to 98, which corresponds to section 60 to 63 of the earlier act. Section 335, now they have defined the regular income of an NPO, which we shall discuss in the forthcoming slides. The provision consolidates within a single section the primary sources of income that will be relevant for determining the taxable regular income of an NPO. Now, section 336, it deals with the determination of taxable regular income of a registered NPO for a given year. And section 337, they have specifically mentioned 13 specific scenarios. If your income falls in any of that category, then that will be considered as a specified income, which will be taxed at the rate of 30%. So a brief comparison between the income related provisions of NPOs in the existing act and the new act. So under the earlier act, the income and tax related provisions were again scattered across various sections. They were fragmented, and it was sometimes difficult as a tax practitioner to determine the correct income of an NPO. But now coming to the new act, they have actually defined what constitutes as a regular income of an NPO. They have also introduced the concept called residual income, which we will discuss in the next slide. They have also mentioned a 30% rate for both non-compliance income and anonymous donations. Now coming to the section 334, which deals with the income tax rates for an NPO. So they have given 2 categories. One is the 30%. This is the specified income, the 13 scenarios that we will see in the next slide. These income include income arising from specified non-compliance and anonymous donations. So these 2 category of income will be taxed flat at the rate of 30%. And the other income, the taxable regular income and any residual income, will be taxed at the rate of applicable rate under the provisions of the act. Now this is a new definition that has been introduced in the new act, which actually defines the core income of the NPO. It is termed as the regular income. Now there are 4 main constituents which are mentioned here. One is income from the core activity. So these are the income derived from any charitable or religious activity for which the NPO is registered and for which it has carried out during the relevant tax year. So let us take an example. For a school, it might be the fees collected from students. for a dispensary or a hospital. It might be the fees collected from the patients. So these are the core activities of schools and colleges, and these will be falling under this bracket of activity income. Now the second constituent of a regular income is income from property, deposits or investments. So this has been defined as income other than income from permissible commercial activities under section 335E derived from any property, deposit or investment held wholly for charitable and religious purpose. So this will include your other incomes, maybe like rent, interest, dividend, etc. Now the third constituent is voluntary contributions. So all the normal donations will fall under this category, excluding the corpus donations. And fourth is the permissible business income. These are the gains arising from commercial activities permissible under section 334, 345 and 346. So these sections are nothing but the erstwhile sections 11.4 and 11.4a. So these four constituents together will be termed as regular income of an NPO. Now they have also introduced a concept of residual income. Now section 355 J of the Act defines residual income as the total income computed without giving effect to the provisions of this part as reduced by regular income and specified income. So there will be a total income, you add up all the sources, you get a figure A. From that you reduce the regular income as defined under this section 335, and then you reduce the specified income, the 13 categories which we will see in some time. So anything, any amount remaining after reducing regular income and specified income would be termed as residual income. Now in most of the cases, the income will be classified either as a residual income or a specified income. So what is the relevance of this terminology? We'll have to wait and watch, and what kind of income will the tax authorities will be not classifying as regular income and will be terming as residual income. So is it like more of a safeguard in for future taxation, or I don't know, like we'll have to wait and watch the relevance of this term residual income. Okay, now first they defined what is a regular income. Now they are dealing with the section 336 deals with taxable regular income. This is nothing. If you have utilized 85% of your income during the year, then your regular taxable income is nil. But in other case where your application falls short of 85% during the year, so here they have given a formula. You take 85% of your regular income, you reduce application as per section 341, which is for your objects, and you also reduce accumulation under section 342, which is nothing but accumulation as per section 11.2 of the old act. Now if anything remains after that, that will be your taxable regular income, which will be taxed at the normal rates given here. Applicable rate under other act. Here they have mentioned here in point B, the taxable regular income and any other residual income will be taxed at applicable rates under the income tax act. Now coming to the 13 specified income, which will be taxed flat at the rate of 30%. The list is given here. We'll quickly have a look at them one by one. The first category is anonymous donation. So the limits are similar as compared to the current act, rupees 1 lakh or 5% of total donation, whichever is higher. Income applied for the benefit of related persons, and the definition of related party persons are given under section 355H. So if any of your income is applied for the benefit of such people, then that portion of the income would be taxed at the rate of 30%. Any portion of income applied outside India in contravention of section 338A. So section 338 states that if you have taken permission from the commissioner and if you want to apply on a certain activity in which for the benefit of India, then only in that scenario, after taking the permission, you can apply the income outside India. Otherwise, you cannot apply. Any investment or deposit made in contravention of Section 350. Now, this Section 350 is nothing but similar to Section 11(5) of the Income Tax Act, which deals with the permissible mode of investments. So if you have made any investments that were supposed to be made as per Section 350, and if you have not done that, then even that portion of the investment would be taxed at the rate of 30%. Deemed corpus donation. Now the term deemed corpus donation we will deal in the forthcoming slides. Misapplication of accumulated income. So when you have applied income for, accumulated income for 5 years by making an application, but if you fail to utilize them in the, as per the objects, then such portion would be taxed at the rate of 30%. Accumulated income ceases to be in permissible mode. So even under the existing act, when we accumulate income under Section 11(2) by filing Form 10, so till the time we are not utilizing the income, we have to keep them invested as per Section 11(5). So here, if those investments are not as per Section 350 of the new act, again that portion will be taxed at the rate of 30%. Accumulated income not applied within the accumulated period. For example, if you would have accumulated the unspent portion of your income for 4 years or 5 years, and if you fail to utilize that income for your objects in that specified period, then again the unspent amount would be taxed at the rate of 30%. Accumulated income paid to another registered NPO. So if you have accumulated your income, and in order to spend that income within the specified period, you try to donate it to the another registered NPO, which is prohibited, then again such donation would be counted as specified income. Misapplication of income. Now, if under this category, you can assume if you have applied your income out of the scope of your objects of your trust deed or your MOA. Additional business income assessed by AO. So NGOs are permitted to undertake incidental commercial activities, but if during the assessment proceedings the AO finds that you have underreported the gains from your business income, and he reassesses it, and any additional amount of reassessment will be considered as a specified income. Non-compliant asset holdings. This is again as per Section 350, which is akin to Section 11(5) of the Act. So any investments that you are doing which is against the new Section 350 will again be taxed at 30%. And unapplied deemed accumulation. So these 13 category of income are mentioned as specified income, and in the right hand side the tax year in which it will become taxable is also mentioned. Okay. Now come. Now coming to the new subchapter, I guess there's some issue in the heading. Okay. So the Section 338, it deals with the situation where an registered NPO can apply their income outside India. So it should be of national interest, the object where India is interested, and you have to take prior permission from the commissioner, jurisdictional. If only these two conditions are there, then only you can spend the money outside India. Now, Section 339, which deals with corpus donation. So this is again very similar to the old provisions, where any corpus donation with the specific letter taken from the donor that this donation shall form the corpus of the trust would not be considered as part of the total income, and there is a condition specified where the corpus donation has to be invested or deposit in one or more modes or forms specified under Section 350, maintained specifically for such corpus. Now the importance of this years was even ignored previously by a lot of NPOs, and it becomes of a greater importance in the new regime. The meaning of this word is that maintained specifically for such corpus is that let's assume an NPO has only one bank account where they receive all their donations. So what this word is trying to say is that no, you need to open a separate bank account where you will have to accept the corpus donations. You can't mix the funds. So if any of your clients are following the practice of maintaining only one bank account, which is common for corpus donations and regular normal donations, kindly guide them ki please open a separate bank account and shift all the corpus donations to that bank account. Otherwise, this is again a violation, a specified violation, and such corpus donations would be eligible for tax at the rate of 30% if they are not kept in any of the form mentioned under section 350. No change as compared to the old provision. Now coming to the new concept which is introduced is deemed corpus donation. So this provision was already there under the current act. It's just that they have given it a new term, deemed corpus donation. What does this say is that now this is only applicable for in case of NGOs whose property includes any temple, mosque, gurudwara, church or any such place as notified under section 133(1) of the new act. And if they have received any donation specifically for renovation or repair of such religious place, then here at the wish of the NPO, such donations can be considered as deemed corpus donations. But again, the conditions which were mentioned here are again applicable here, that these funds should be invested separately as per section 350. The funds should only be used for the renovation of the religious place, and there's a prohibition on inter-NPO transfers. You cannot donate these funds to any other NPOs. So again, old provision just defined with a new word. Now coming to section 341. 341 is more or less the computation mechanism given in the section, like how will you compute your total taxable regular income of the trust. So these includes the permissible expenses, the income that you need to consider, the income that you need to exclude. So instead of theoretically writing here, I have prepared a separate computation chart. Is it visible? Should I zoom? So here if you see, you need to start with your regular income as defined under section 335, which we dealt earlier, the four components: the voluntary contribution, permissible receipts from business activities, the income from the core activities, and the income from investment and deposits. So here you will come to the total of your regular income before application, your total receipts. Now from that you will have to reduce the 15% of donation given to other trust. Even under the existing law, whenever an registered NPO gives a donation to another registered NPO, only 85% of such donations are allowed to be claimed as expenses. So you need to consider only 85% of such donations. Then income applied for charitable and religious purpose in India, you will have to reduce. So this entire mechanism is a cut copy paste of the current provisions of the Act. We are just having a quick glance at it. Then again, any corpus donation which was invested back in the permissible mode, that you will have to reduce. Any repayment of loan or borrowings applied for objects, even that you will have to reduce. Now, after you have reduced all this, your permissible expenses, then you will have to deal with the disallowance. Now, the disallowance in relation to the TDS compliance. If for any expenditure, if you have not deducted TDS, then 30% of that expenses shall be disallowed. Then any payment exceeding 10,000 rupees or 35,000 rupees in cash, that will be disallowed. Then you have to reduce your deemed application. One second. Okay. Now we'll stop this chart here. Before going further in the chart, I'll have to explain a few terms which are used in the new act. So they have introduced a concept of deemed application, which is very similar to the concept given in the current explanation 2 of section 11(1) of the Income Tax Act. So in the current act, there's a provision where you can file a form 9A and you can accumulate your income for 1 year if your application of income is less than 85%. So again, actually this provision, when the original bill had come in February 2025, this provision was removed. So after representations from various authorities and the institute, this provision was again introduced in the final bill. So again, a form similar to 9A will be introduced in the form of rules, and that form will have to be filled on or before the due date of filing of return of income. Another good part that they have introduced in this revised deemed application concept is that now currently in the act, the word for accumulation of income, the forms that you had to fill, either form 9A or form 10, those would have to be filled 2 months prior to the due date of filing of return of income. They have removed that condition of filing 2 months prior, and now these forms can be filed on or before the due date of filing your return of income. So previously, this concept was already there in the act, but it was not defined as deemed application. So they have defined this as deemed application. Now the concept of accumulated income, which is a cut copy paste of the section 11(2) of the Income Tax Act 1961. So again, if an NPO is unable to spend 85% of their income during the year, then there's an option of accumulating that income up to a period of 5 years. So previously under the current act, a form 10 was available. So under the new act, they are going to prescribe a similar form which will have to again be submitted on or before the due date of filing your return of income. Now this accumulated income, again, till the time you don't utilize these income, you will have to keep it invested as per the section 350 of the new Income Tax Act. Now again, a new concept that is introduced is concept of deemed accumulated income. Now the regular income after deducting the applied income and the accumulated income under section 342 to the extent of 15% will be considered as deemed accumulated income. So currently also under the existing law, 15% is by default considered as exempt up to 15%. So for example, a trust would have earned 100 rupees during the year, and they were only able to spend 90 rupees in that year. So the 10 rupees remaining portion, even the current act, was exempt from tax. Now this 10 rupees in the new Income Tax Act will be termed as deemed accumulated income. Now the key change here is that under the existing law, this exemption up to 15%, there was no attached condition to it that it has to be invested as per the section 11(5) of the old act. But in the new act, they have mandated it that these accumulation up to 15% of the income will have to be invested in one of the modes mentioned under section 350 of the new act. And the consequence, the failure to deposit the same as per section 350, this would be considered again as a specified income as per section 337, and it will be taxed at the rate of 30%. Yeah. Now, as all the terms which are given here in this computation chart have been explained, now we can go ahead and analyze this computation mechanism. Now after from your regular income, you have to reduce the application of the permissible application of income. You need to add disallowances. You need to reduce deemed application. And then after this, if there is any further accumulation as per section 342 or 343, that will have to be reduced. And the final figure that you arrive at is the taxable regular income. So there is no substantial change as compared to the old provision. And here, these 13 specified income given on the right hand side of the table, these will be taxed flat at the rate of 30%. So the combination of this taxable regular income which we are arriving in the table given in the left, and the total of the specified income would be your total income for that year. Okay. Now going ahead, now this chapter deals with the permissible business activities of a registered NPO. Now this is very similar to the section 11.4 and 11.4a of the old Income Tax Act 1961. Now here the major difference here is that they have bifurcated the permissible business activities between two different types of NGOs. Category 1 NGO is that the NPO which is not dealing with activities which are of general public utility nature, which is the last limb of charitable purpose as defined under section 223. And one limb is for the NPOs who deal with general public utilities. Now the same has been given here in the form of a flow chart. Now the section 345 deals with the permissible activities of a registered NPO which does not deal with general public utility activities. Here they have specifically prohibited commercial activity in general, but only activities which are incidental to the objects, and they have maintained separate books for these activities. Under only these two conditions, when they are satisfied, a non-GPU category NPO can do business activities. Now for a GPU category, that is general public utility category NPO, they are allowed to do commercial activity which is for the advancement of their objects. The existing cap of 20% limit, the business receipts should not exceed more than 20% of their total receipts is still there. An additional condition that they have introduced under the new act is that even these NPOs will have to maintain a separate book for such activities, which was not there in the current act. So this proviso, which was there as a proviso to section 215 of the current act, it mandated the limit of only 20% was prescribed there for doing the business activity. There was no separate requirement for maintenance of books of accounts. So if any of your clients, an NPO, they are dealing in activities which are termed as general public utility, and if they are doing commercial activities, so now moving forward, irrespective if your receipts from such activities exceeds 20% of your total receipts or not, you will have to maintain separate books of accounts. Otherwise, if these conditions are not met and the NPO continues to do the commercial activities, then it is a specified violation which will lead to cancellation of the registration of the NPO. And exit tax as per section 352 will be applicable. See now, if you look at the definition of charitable activities, they have defined yoga, education, relief to the poor, preservation of environment, medical relief, and the last limb is termed as any other activity which is in the nature of general public utility. So any of your activity which does not specifically fits in the 5 or 6 specific definitions given above, then those activities are termed as general public utility. So now an NGO might be doing a activity which can be termed as general public utility. Now if your activity is in relation to GPU, I'll use the short form GPU, General Public Utility. And if for the advancement of that object, you are doing some business activity, then this 20% limit and you have to maintain separate books of accounts, these conditions will have to be met. You will fall in the category of section 346, which deals with GPU category. But if you all are, if the NGO is doing activity which is not in the nature of GPU, which is quite specific, let's assume they run a hospital or they run a school or a yoga institute, then they are only allowed to do incidental business activities. So here the word incidental is of a great importance. You cannot do any business activity if you are doing a non-GPU activity and get away with it. It will have to be, for example, let's assume for a school, their main receipts are from school receipts. Now let's assume if the school is also doing selling of books and uniform. So that activity is incidental to achieving their objects. And in that case, you are allowed to do such activities. Now these are the compliance related provisions. Section 347, which deals with books of accounts. No substantial change. Again, they are going to prescribe the required set of books in the form of rules, which are not yet prescribed, which is very similar to section 12A 1BI of the Income Tax Act. Now, audit of accounts. Again, if the income of the NPO, without giving effect to these provisions, exceed the maximum amount not chargeable to tax, in that case, you will have to get your books of accounts audited by a CA and furnish the audit report. Now, the interesting part here is that previously, the due date for furnishing the audit report was prescribed within the section, which was synchronized with the due dates given under section 44AB. But in the new act, they have not prescribed the timelines for furnishing the audit report. Instead, they have used the phrase by such date and in such form as may be prescribed. So I guess CBDT, by using their powers, will prescribe the due date, the type of form, the contents of form, which has to be uploaded by the NPO. Return of income. So this is very similar to the section 12A 1B of the Income Tax Act. ITR has to be furnished as per section 263 1C of the new act, which corresponds to section 139(1) of the old act. So in the cases where the books are not required to be audited, the due date is 31st July. In cases where the books of accounts are required to be audited, the due date is 31st October. Very similar to the old provisions. But there is one interesting change. The 2025 Act does not provide for filing of a belated return for a registered NPO. So if at all you miss the deadline of this 31st July and 31st October, you will not be able to file your belated return and you will lose your exemption for that year. I really don't see the logic behind it. It was a safeguard available to NPOs earlier, but now the reference of filing belated return has been completely removed from this provision. I don't know if it's a drafting mistake or do they want the NGOs to be more compliant in terms of timelines. We'll have to wait and watch if there is some circular or some amendment in this regard. Now section 350, which deals with the permitted mode of investments. This is very similar to section 11.5 of the old act. Now previously, now in this section 350, they have given a reference to a schedule 16. And in that schedule, all the, I guess there are around 32 modes of investments which have been prescribed there. So previously under the current act, your eligible mode of investments were scattered across 3 sections. It was given under section 11.5, it was given under rule 17C, and also in the form of exceptions in provision to section 13.1. Now all these have been combined and have been put together in schedule 16 of the new Income Tax Act. There is no change in terms of there are no new modes of investments that have been prescribed. There is no deletion of any of the earlier mentioned permitted mode of investments. Now, for your ease of reference, I have just informally divided these investments in various categories. Government-backed instruments, deposits with banks and financial institutions, investment in public sector companies. So I've created these 8 or 9 different headings, which later on you all can have a look. The presentation will be shared. Now coming to the 5th chapter, which deals with violations and the consequences of those violations. Now section 351, it deals with specified violations. Now they have given 7 specific violations. We'll have a look at it quickly. The first type of specified violation is application of income other than that for stated objects. So we, as a consultants, we have to guide our clients that kindly do not spend any money which is not permissible as per the object clause of your instrument, like trust deed or the MOA. Second type of, even if the expenditure is of a charitable nature as per section 223, but your trust deed does not permit to make such an expenditure, it will still be considered as a specified violation. The second type of specified violation is contravention of commercial activity restrictions. So as given here, section 346 and 345, if there is a violation in conducting of business activities, permissible commercial activities as per these sections, then again it would be considered as a specified violation. Application for private religious purposes not benefiting the public. So if you have created a trust but for religious activities, but the activities are limited to a particular family or a deity which is very home specific, then again in such case the activities will be considered as a specified violation. Benefit to only a particular religious community or a caste. So if your religious organization gives benefits to only a particular religion, then again it is considered as a specified violation. Activities not genuine or not in accordance with the registration conditions. So if at all the officer finds that it's a sham trust, the activities are not genuine, in that case your registration would be liable to be cancelled. It would be considered as a specified violation. Moving on to the next violation is non-compliance with other law that has attained finality. Now for example, for a trust or for a NPO, let's assume the NPO is also registered under FCRA law, and if there is a non-compliance there and the order has been issued by the authorities that and the non-compliance has been finalized, in that case it is considered as a specified violation and you might lose your registration here. So as an NPO, it's not only important that you are following all the rules and regulations as per the Income Tax Act, but you have to be in compliant with all other applicable act, whichever applicable to you. And the last category is false or incorrect information in the registration application. So whenever you are applying for registration under the current, under the new act, under section 332, and if you have made any false claim or given wrong information in that application, then again it is considered as a specified violation. Yeah. Actual activities. Yes. So again, nothing new is there given here. All these are a part of existing provision only. So these specified violations are even part of the current act. It's just that they were scattered across different places. Now they have given it under one section. From non-resident, you have to take FCRA registration, and religious trust cannot take. You need to take FCRA registration. If it is from an Indian passport holder, then you are not required to take FCRA registration, even though he is staying abroad. But if it is from a non-Indian citizen who has given up on his passport also, then you will have to take, even though it can be as low as $1. Who has, yeah. वेर आपने मंदिर वंदिर नहीं बनाया, आपके सपोज घर की कोई देवी है या कुछ है विच इज स्पेसिफिक टू योर ओन फैमिली, होती है ना लोगों की ऐसे कुल देवी जैसी या कुछ विच इज़ वेरी स्पेसिफिक टू योर ओन फैमिली और वेरी लिमिटेड अमाउंट ऑफ पीपल, अगर आपने उसके लिए ट्रस्ट बनाया है, मतलब आपकी एक्टिविटीज़ अगर वैसा ही काम कर रही है लिमिटेड, तो उसमें आप फॉलो कर सकते। या आपने एक ट्रस्ट बनाया, आप मंदिर में पूजा कर रहे हो पर जिसमें सिर्फ आपकी फैमिली आना अलाउड है, या आपने आपका पर्सनल एक मंदिर बना दिया जिसमें आउटसाइडर्स अलाउड नहीं है, सिर्फ आपके फैमिली मेंबर्स अलाउड है। तो कई तरीके के एग्जांपल हो सकते हैं, दिस इज जस्ट अ जनरल एग्जांपल। एनी मोर डाउट्स इन रिलेशन टू दिस स्पेसिफाइड वायलेशन? Now section 352, which deals with tax on accreted income. ये एक ऐसा सेक्शन है जो सारे ट्रस्ट को इससे बच के रहना पड़ेगा। अगेन इट्स अ पार्ट ऑफ योर द एग्जिस्टिंग लॉ ऑल्सो, बट अभी ये लोग ने है ना, दे हैव गिवन अ टेबल अंडर दिस सेक्शन एंड दे हैव गिवन दिस 9 circumstances where the provisions of this tax on accreted income would be applicable. This is a modified version of the table given under the Act. So these are the 9 circumstances where if you fall under in any of these circumstances, you have committed a violation, and then the due date for making the tax payment and the date of violation is given in this table. So we'll just quickly go through these 9 categories quickly. The first category is that where your registration is cancelled and withdrawn, but you have filed an appeal against that order. So in that case, the specified date would be date of cancellation of order. The due date for payment would be date of appellate order confirming the cancellation. So here, in this situation, your liability is deferred until your appeal is disposed. In the second case, where the registration is cancelled or withdrawn and no appeal has been filed by the NPO, in that case, the specified date is given as the date of cancellation of order. Due date for making the tax payment as prescribed under this provision is expiry of appeal filing period. So here, as a practicing CA, it is very important that we don't miss the appeal filing deadlines in case the order for approval of registration has been rejected. It's still considered as registered only ना, मतलब जब तक उसका order final नहीं आ रहा है। नहीं इतना टाइम नहीं लगता है आजकल, क्योंकि इसमें क्या होता है, योर द अथॉरिटी हु इज रिजेक्टिंग योर ऑर्डर registration is the commissioner itself. So your next level of appellate authority is directly the ITAT. ये ITAT लेवल पे होगा ना, अगर आप अपील फाइल कर रहे हो तो जब तक ITAT का ऑर्डर नहीं आ रहा है। सॉरी, अब ये सब प्रैक्टिकल डिफिकल्टीज है. मे बी टिल द टाइम आपका ITAT का ऑर्डर नहीं आ रहा है, मे बी यू फाइल फॉर द एप्लीकेशन एटलीस्ट ऑनलाइन फॉर रिन्यूअल ऑफ योर रजिस्ट्रेशन. पीछे जो बैक एंड पे आप कर सकते हो टिल द टाइम द ऑर्डर इज नॉट अचीव, दैट टू यू विल हैव टू कीप ऑन. So again here, modification of objects without registration. So if you have modified your objects, so there's a specific re-registration required, even under the existing act, even under the new act. And for example, if you have modified your trust deed or the object clause in your Section 8 company, and if you have not applied for re-registration, then again, it's a non-compliance and tax would be applicable as per the accreted income. So here, I'll just read the different circumstances. The specified date and due date for payment can be referred to you later. Due to paucity of time, I'll just quickly move ahead. The another category is modification of objects and registration is rejected when you reapplied. The fifth category is modification of objects, registration rejected, and again no appeal has been filed. Sixth is failure to apply for re-registration when required. So this is very important for us. The sixth point as practicing CS. Earlier what I mentioned, that we'll have to keep a track record of all our NPO clients when their registration is due, and we'll have to do timely reapplication for registration. Seventh is conversion into ineligible form. If your charitable activities turn into non-charitable, this deals with that situation. Eighth is merger with a non-qualifying entity. So merger is only allowed for a registered NPO with another registered NPO. So in case you have merged with another entity which is not a registered NPO, then you have committed the violation as given under point 8. Similar objects, yes. Yes. वरना तो क्या होगा, if that is not the case, then a charitable organization would be able to get merged with a religious organization. And the ninth, the last point is dissolution without due transfer of assets. So whenever you have dissolved an NPO, so within 12 months you have to transfer your assets to another registered NPO. So if you have not done that, then again tax as per accreted income will be applicable. Now here quickly I have given the computation mechanism of the amount on which this accreted tax would be applicable. It's again a replica of the current law. We will not discuss this. Okay. Now after the specified violations and tax on accreted income, which is also known as the exit tax, now they have given in the new section 353 other violations. Now these are smaller violations which will not attract cancellation of registration, but you will have to pay tax at the rate of 30. You will lose your registration for that particular year. Okay. So this consolidates the different provisions which were there in the erstwhile law, section 1310 and section 1311 of the 1961 Act. Now the four type of violations that are mentioned here are: if an NPO fails to maintain books of accounts as required by the Act. Second is fails to get its accounts audited. Third is fails to furnish its return of income before the due date. And fourth is being engaged in the advancement of any other object of general public utility which carries out commercial activities in violation of section 346. So if you fall under any of these four categories, you will lose your registration for that year, and there's a specific income computation mechanism which I have dealt in the next slide. Now here an important observation is that the fourth type of violation which is being engaged in the advancement of any other object of general public utility carries out commercial activities in violation of section 346. Now this is also mentioned as a specified violation, and it is also mentioned here in the other violations. If you fall under the category of specified violation, you are liable to lose your registration. Here, if you have, but here, if you fall under section 353 violation, then you will lose your registration only for that particular year. So I don't know if it is a drafting error or not, because there one violation cannot be covered under two different sections with having two very extreme impact on the outcome. See here, moving back to section 351 under the second category, contravention of commercial activity restrictions. So here, if the officer considers your violation under this section, you will lose your registration completely. But if it is considered as a violation under section 353(1), then you will lose your registration for only that year. I guess there has to be some clarification given by the government why this is mentioned at both the places. Again, so if you have committed any of these violations, other violations, there is a specific computation mechanism which is prescribed, which is again very similar to the computation mechanism under the existing law. So your net income would be taxable, but your expenses that are supposed to be deducted, they will be subjected to the following few conditions. First, the expenditure must be incurred in India and wholly for the objects. Secondly, your capital expenditure would not be considered for calculating of your net income. Expenditure cannot be met out of the corpus. Expenditure cannot be incurred out of a loan and borrowing. Depreciation would not be allowed if the original cost of the asset was earlier claimed as an application of income. And donation to other NPOs will not be deductible. And again, all your expenses would be subjected to a check of section 36(4) to 7 of the new act, which deals with the payment, cash payment of rupees 10,000 or 35,000 or more. So you will lose your registration and your income you will lose your and your income will be calculated like this. Now the section 80G5 of the earlier act has now been shifted to section 354 in the new act. Okay. Now again, there are few conditions which are prescribed of which type of NPOs can take registration under the new section 354. It should be not established for any particular religious committee. Cap on religious expenditure, if at all the NPO is doing, then it should be restricted to 5% of the total expenditure. Restriction on asset transfers, maintenance of accounts, statement of donations has to be maintained by them, and issuance of donation certificates. Now again here, like section 332, they have given a table where your category of application is given and the appropriate application timeline, the order time limit and the validity of the sections are given here. So they have given here 5 different categories of registration category. Important thing to note again, here there is no provision for getting a 10-year registration even for the small NPO. So here a small NPO or a big NPO will be given a maximum validity of only 5 years under the section 354. Now there is one slide which I missed in the beginning, which I would like to discuss with all the members here. Yeah. So previously, if you see the chapter heading under which the provisions in relation to charitable organizations was given, the heading of that chapter was incomes which do not form part of the total income. But now they have shifted completely to a new heading called special provisions relating to certain persons. They have been moved out of the income exempt category. So I would just like to know the view of the members. What do you all think? Will this have an impact on the uh, judgments or how the law in relation to charitable organizations is viewed? Any opinion of any member? I think this is a small, subtle change, but it's going to have a huge impact on the way the law in relation to charities is viewed. Previously, considering the exempt nature of income as per the headings, which incomes which do not form part of the total income. So the courts were taking a very liberal view whenever an issue in relation to charitable trust organized was arising. But right now, all these, if you see the entire new code, which is chapter 17B, which deals with NPOs, it's more of a compliance specific framework. अगर आपने ये नहीं किया तो ये अट्रैक्ट हो जाएगा, आपने रजिस्ट्रेशन डेडलाइन मिस किया तो आपको एग्जिट टैक्स लग जाएगा. सो एवरीथिंग इज वेरी कंप्लायंस हैवी अंडर द न्यू कोड. सो आई थिंक गोइंग अहेड, ये जो अभी तक the courts were giving liberal judgments, I think this will have an impact in relation to cases of NPO. And as tax professionals, we will have to be very careful in helping our clients meeting the deadlines and to ensure that the exit tax or their cancellation of registrations do not happen. With this, I have completed all my slides. Now, if you all have any queries, we can move forward to that. Sorry? Merger is there. वो आपके ट्रस्ट डीड में क्लॉज होना चाहिए. डिसोल्यूशन इज परमिटेड, सॉरी, डिसोल्यूशन इज परमिटेड, पर उसके कंडीशन है ना, फिर वो विद इन 12 months यू विल हैव टू ट्रांसफर द असेट्स टू अनदर एनपीओ.
Members are requested to please be seated for 5 minutes, please.
Sorry, actually this...
It has to be there in your trust deed. Then only you can dissolve it. Otherwise, first you have to take permission from charity commissioner.
वो क्या है, now dissolution is being permitted specifically in Maharashtra. It's called deregistration of a trust. It's not. So actually this whole thing that has come up in relation to irrevocable clause. Now this term is specifically very important in the Indian Trust Act, which deals with private trust and not charitable trust. अभी आप महाराष्ट्र जैसे ट्रस्ट में आप बोलते हो, महाराष्ट्र जैसे स्टेट में कि आपको इरिवोकेबल क्लॉज का जरूरी है. यहाँ आप एक ट्रस्टी को अपॉइंट नहीं कर सकते विदाउट फाइलिंग अ चेंज रिपोर्ट विद द चैरिटी कमिश्नर. तो प्रैक्टिकल इम्प्लीकेशन ये इरिवोकेबल क्लॉज का बहुत कम है, स्पेशली इन अ स्टेट लाइक महाराष्ट्र. So I don't know why the government is trying to inherit this within the law itself.
And members who are practicing for NPO, they should see their trust deed that irrevocable clause is there. Otherwise, they are rejecting the applications. Though there is a latest ICAI decision also and Bombay High Court decision also, still they are not listening and they are rejecting the applications.
And going forward, when they have mentioned that word specifically in the act, so they, I guess the approving authorities have been given more power to reject such applications.
It is advisable you change your trust deed, you get it amended. Otherwise, it will be very difficult to get the registration under income tax.
Exit tax लगेगा as per section 352. यू कैन रीअप्लाई, पर एक बार के लिए तो एग्जैक्ट टैक्स प्रोविजन अप्लाई हो जाएगा. फॉर दैट ईयर क्या उसका जो कंप्यूटेशन मैकेनिज्म है, सो टिल डेट जो अभी आपके असेट्स एंड लाइबिलिटीज जो बने हैं, आप वो इफ़ यू सी दैट फॉर्मूला, तो इनडायरेक्टली दे आर ट्राइंग टू से आपके नेट वर्थ पे एमएमआर टैक्स लगेगा, मैक्सिमम मार्जिनल रेट. नहीं, see this irrevocable clause, they are only demanding only in the case of trust, not in the case of society or a section 8 company. क्योंकि सेक्शन 8 कंपनी में क्या है, यू आर गवर्न बाय द कंपनीज एक्ट, तो उसमें जो डिसोल्यूशन का जो क्लॉज है, भले आपके एमओए में नहीं है, तो यू विल हैव टू, वो जो शेड्यूल होता है उसका एमओए का, तो उसके हिसाब से वो परमिटेबल है एज पर कंपनीज एक्ट. फॉर अ सेक्शन 8 कंपनी नहीं, सेक्शन वहां तो देखो, इफ यू आर फाइलिंग फॉर एप्लीकेशन, वो वहाँ फॉर्म में ही पूछता है इज द इरिवोकेबल क्लॉज देयर और नॉट. आप जैसी नो करोगे वो आपको बढ़ने ही नहीं देता है. तो इन सच केसेस इट इज, मोस्ट ऑफ द लोग क्या कर रहे हैं, येस करके कर रहे हैं, और मीन वाइल में जब तक हियरिंग का डेट नहीं आ रहा है, दे आर गेटिंग द डीड अमेंडेड. दैट्स द ओनली ऑप्शन यू हैव प्रैक्टिकली. लीगली वो सही नहीं है, बिकॉज आप फॉल्स इंफॉर्मेशन दे रहे हो. पर अगर या तो यू वेट, आप पहले डीड अमेंड करो और फिर अप्लाई करो, तो हो सकता है आपका रिन्यूअल का डेडलाइन चला जाए. तो बहुत सारे इसमें प्रैक्टिकल कॉम्प्लिकेशंस है. तो क्या
6 months before.
6 months before you have to apply before it is getting expired. तो अभी जैसे मोस्ट ऑफ द NGOs ने 30th September was the deadline to expire to renew, जिनका AY 26-27 में एक्सपायर हो रहा था. yes. देखो वो ऑफिसर्स, if it comes to his notice, he will issue you a show cause notice कि you are non-compliant under Maharashtra Public Trust Act and tell me why your application shouldn't be rejected.
Compliance under any other act, even if you don't file your change report, he can reject your application. Sometimes schools are filing for this 12AB registration and they don't get permission from Maharashtra government. They are rejecting the applications. See, both are different acts. We can't compare here.
Sorry, I didn't hear your question. Both are two different. Trustees.
Yeah, permanent trustee and these lifetime trustees, they have come out with that. But this is not the subject of today's session, madam.
See, there's no correlation in the two. It's just that there are other questions also in line. This maybe we can deal after the seminar 1-to-1. Okay?
Sir, currently they are rejecting lot of registration due to this irrevocable clause.
Yeah.
So whether you advise that we should go for an appeal or that amendment is
देखो
only-
अपील तो फाइल कर देने का.
And you
So-
can take the help.
Yeah.
You can take the help of latest Bombay High Court decision.
तो वो आपको रिलीफ तभी मिलेगा जब आप अपील में जाओगे.
and if it is rejected, then we have this same tax computation mechanism in this also.
Yes.
Yeah.
Yes. The exact tax.
So that we have to do it on net worth.
Yes. उसका वो पूरा फॉर्मूला ये मैंने दिया हुआ है.
Otherwise, as soon as you file your application, you go for amendment of your trust deed.
Amendment of your trust deed.
And you can show him the acknowledgement that we have gone for this. Then also they are allowing.
So even if you in few cases they have agreed कि भाई आप वो application जो किया है amendment of deed का सिर्फ वो भी बता दो before charity commissioner and they are cooperating with you. Yes. Going forward at least वो होता है देर आए दुरुस्त है तो at least going forward. हाँ क्योंकि अभी तक तो देखो अभी पैसे मिक्स हो गए ना यू कैन अभी भी आप कर सकते हो देखो आपके बैलेंस शीट में कितना कॉर्पस दिख रहा है एंड इफ दैट इज अनस्पेंट और आपका उतना बैलेंस अभी भी अवेलेबल है आपके बैंक अकाउंट में तो आप नया बैंक अकाउंट खोल के उतना अमाउंट यू कैन ट्रांसफर. So if it is already invested separately then not an issue. A lot of time people because see even depositing in a normal scheduled bank even a normal saving account is a permitted mode of investment. तो अभी तक ट्रस्टीज क्या बोलते थे कि बैंक अकाउंट में ही रखा हुआ है ना परमिसेबल मोड है तो रहने दो वी आर नॉट गोइंग टू ओपन अ सेपरेट बैंक अकाउंट.
But in Act it is written it should be in separate bank account.
Separate earmark for that. Yes.
So you can't say that it is lying in savings bank account. So we have invested as per section 11(5).
तो वो कॉर्पस ही माना जाता है. वो एक्चुअली क्या है ना ट्रस्ट डीड देखना पड़ता है. लॉट ऑफ टाइम ना ट्रस्ट डीड में लिखा रहता है दैट एनी इनकम accruing on the corpus funds would be construed as corpus funds. If that is silent, then maybe you can use it in your other activities. वो आपके इनकम में काउंट होगा. अगर मानते हो आपके ट्रस्ट डीड में स्पेसिफिकली लिखा है कि दैट विल बी कंसिडर्ड एज अ कॉर्पस डोनेशन ओनली एनी इनकम अक्रूइंग ऑन दोज फंड फिर आप वो यू डोंट डिस्क्लोज इट एज योर इनकम. तो भी अलाउड है. नहीं एफडी तो आपकी अलग ही हो गई ना. एफडी सेपरेटली आप आइडेंटिफाई कर सकते हो. एफडी के अलग अलग नंबर्स होते हैं. यू कैन सेग्रीगेट द फंड्स ना. आपके पास अगर 5 एफडीज है जिसमें से 3 कॉर्पस फंड स्पेसिफिक है तो यू कैन ऑलवेज शो कि भाई ये 3 है कॉर्पस फंड. ये मेरा 15 लाख का कॉर्पस है और ये 3 5-5 लाख की कॉर्पस की एफडी है. तो सेपरेटली आप बता सकते हो. पर अगर आप एक ही बैंक अकाउंट में रख रहे हो तो वो इशू हो जाता है. तो इशू है ना आप कैसे सेग्रीगेट करोगे. आप कौन सा फंड यूज कर रहे हो नहीं कर रहे हो. देखो अगेन मैंने जैसे इन्होंने पूछा वो ट्रस्ट डीड में बहुत बार लोग लिखते हैं कि एनी इनकम अक्रूइंग ऑन द कॉर्पस फंड वुड बी कंसिडर्ड एज कॉर्पस. तो फ्यू थिंग्स का यस या नो आंसर नहीं होता है. कुछ चीज़ों के लिए यू विल हैव टू रिफर टू योर ट्रस्ट डीड एंड ऑल. और बहुत बार क्या है डोनर भी जब डोनेशन देता है तो बोलता है टिल द टाइम यू आर नॉट यूटिलाइजिंग दीज फंड्स एनी इनकम दैट इज अक्रूइंग ऑन दीज फंड्स will be considered as corpus donation only.
Only one more question.
डोनर का नुकसान है. That's what she asked. देखो वो कैंसिलेशन कौन से ईयर से कर रहे हैं वो लोग वो भी देखना पड़ेगा.
थैंक यू अमन. Aman has briefly tried to touch all the amended sections in new income tax law. It will definitely enrich our knowledge. And before that, I request CA Pradeep Chandwani to formally give vote of thanks to Aman. And members, their first counter is Gen counter and other 2 counters are non-Gen counter.
Thank you Giriraj ji for giving me an opportunity to present a vote of thanks to our today's speaker, C. Aman Giriraj Khandelwal. Well, I must appreciate that he has taken us through all the amendments or all the new future amendments which are going to come up in the year 2025, rather 2026, which we are going to come up from April onwards. And he has provided us a very nice presentation where he has given the pointers which we should taken care of, the new jargons that are going to be used in the future act with respect to the charitable trust. And he also answered all the questions, whether futuristic or current, I think very diligently. With this, I propose a very well-deserved vote of thanks to our today's speaker. Thank you. Thank you very much, Aman. With this, we break for 20 minutes and we go on to the next session.